It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yes, it's the Real Estate Breakfast, your weekly pulse on the Australian property market, where the numbers meet what is actually happening on the ground. And remember, we're independent media and not tied to any real estate agency or developer. And as a result, we've got that curated list of real estate companies around Australia. So if you're thinking of selling or buying your property and you just don't know where to begin with either an agent or a real estate agency, let us know what city you are in and we will make that match with a vetted agent in your area. As simple as that. Our email address is myrealestatepodcast@gmail.com. Well, rocking through the week up to a Thursday already, July the 9th, Australia's property market. Now, it is entering a softer phase. We know that. And some experts say that the resemblance to previous downturns, well, the outlook this time is expected to be far less severe. According to Domain's latest price cycle report, Sydney and Melbourne, as we know, are leading the slowdown. History shows that buyers who wait for the absolute bottom of the market often miss the recovery. Early signs of a turnaround usually appear through fewer listings, improving auction clearance rates and stronger buyer activity before prices begin rising again. If we only knew when the bottom of the market was in fact the bottom, what a gift that would be. But I was done playing that guessing game over 20 years ago, because you can't do it, can you? Off the back of that, let's go to Canberra and catch up with Tim Reardon. He is the chief economist from HIA. And welcome, Tim, onto the Real Estate Breakfast for the very first time. Yes, if we could pick the bottom of the market. Oh, man, that's like winning lotto.
Well, you never need to pick the bottom of the market. The key is to never sell a house. You just keep buying, and if you wait long enough, you will get a positive return out of it.
Indeed, yes, just never sell. Now, PropTrack has reported that apartment approvals have hit another speed bump, yet detached housing approvals are quietly climbing to their strongest level since 2021. Question is the market starting to favour traditional family homes again, or is apartment construction becoming too difficult to make stack up? What do you think?
Oh, there's a lot going on in the housing market at the moment. But just firstly, on that house price topic that you've mentioned there, this is a really narrow window of opportunity to get into the housing market at a price lower than what it was 12 months ago. But what's happened over the past particularly 6 weeks is the government, through the federal budget, have talked about enormous changes to housing tax policy and caused market confidence to collapse. And we can see that through every metric, even into new home sales, number of people visiting display sites, number of people Googling new house and land package. All of the indicators have really fallen away very sharply since budget night. However, at the same time, the fundamentals of supply and demand are continuing. And we can see rental vacancies week by week are getting tighter as we build fewer homes than what we need to meet our housing needs. And so as a consequence, this is going to be a relatively short-lived little price correction here. There is no doubt that higher interest rates that came about earlier in the year are a component to that. And Sydney is the market most sensitive to changes in house prices, given that the average price of a house there is well over $1 million these days. For home buyers moving in, this is a narrow window of opportunity. In regards to whether we're shifting away from detached or units, no, this is really just the apartment market coming back online. The apartment market got hurt during the pandemic. Households wanted more space. They shifted out. We also saw state governments imposing taxes on foreign investors. We're only building half the volume of apartments we were a decade ago. So with just a little bit of time, we can see state governments investing in the infrastructure for apartments, and we're going to see the apartment cycle now pick up over the course of the next at least 3 years, if not 5 years. And it's going to vary depending on which jurisdiction you're in as to whether Sydney, Melbourne and Brisbane are going to pick up sooner than the others.
If we can't get enough projects approved today, how realistic then is it, do you think, that we'll catch up over the next few years?
We're not going to catch up over the next few years. This is a multi-decade problem, and it's going to take a very long time to solve. What I am hopeful of, though, is that we are seeing enormous, particularly at state and local council levels, reforms happening that are going to increase the supply of new home building. And I'm hopeful that by the time we get to 2030, we will be building homes at the rate necessary to build 1.2 million homes in the following 5-year period.
Now, Queensland's recorded the biggest fall in these building approvals, while New South Wales and Western Australia pushed higher. What do you think is happening around? I know you were talking just about the developers with the apartments and detached. Are developers, do you think, becoming more selective about where they're building right now in this landscape? Or are state policies starting to produce very different outcomes for them?
Whether it's state policies or local council policies, it will determine whether we're going to build a cycle of apartments. And what we can see on the Gold Coast at the moment is a very business proactive development local council. Heard the other day the Lord Mayor say that there are 77 cranes erected on the Gold Coast at the moment. So that's going to see a large volume of commencements there. Perth, Adelaide, not typically apartment markets, but very strong level of population growth and economic growth happening there. So it's going to continue to push slowly towards apartments. But of course, it is the Sydney and Melbourne markets where apartments dominate. And in Sydney, we have seen the state government announce a policy where they're going to finance 50% of off-the-plan apartment construction. And that's seen an enormous shift in commencements. In fact, roughly a doubling of commencements in the December quarter of last year. And that's likely to continue at least for the first part of this year.
Let's get back to the detached houses, because I see that the approvals have topped 10,000 for 4 straight months, but higher density projects continue sliding backwards, as you've alluded to. That's a lot, isn't it? 10,000.
It is. It's coming online. Detached housing is much more stable than the multi-unit cycle, and it is largely tied to the release of land or the availability of land. The problem detached have is that in those markets where there is strong growth in demand, Perth, Adelaide, Brisbane, we're also seeing land prices rise very quickly as well. Have really been quite fortunate that some of the state government policies coming through in New South Wales and in Victoria have seen land coming online at around about the same price it was 12 months ago. In the case of Sydney, maybe just a little bit less, and that is seeing detached home building in those two regions starting to show signs of recovery despite some of the other challenges that we have in the market with interest rates and the cost of construction.
We are talking to Tim Reardon from HIA. When we come back, we'll see if we can get some sort of a reading, a pulse on the tradies, the builders, and what those numbers are looking like at the moment. Are you finding it easier to do a renovation, to get a builder in? That is all on the way next.
Decode the property market with insider knowledge and insights to better navigate your real estate journey. It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
It is a Real Estate Thursday. Tim is here. Yes, are you finding it tough to get a tradesperson in on your property to do some work? Now, since you're from HIA, Tim, how are those numbers in terms of builders? Of course, a lot of them have gone to the wall. Well, I shouldn't use the word a lot, but there have been many that have gone to the wall. They've had to find new employment elsewhere. What are those figures telling us? Where is the trend at the moment?
Well, this is as good as the trade shortage is going to get at any time over the course of the next 4 years. From here on in, the availability of trades become increasingly tight. We have seen the price of skilled trades rising roughly double to the price of the rest of the economy, and that trend is likely to continue. There is no easy short-term fix to this problem while ever we have 4.5% unemployment, and it does look like the economy is going to remain relatively strong. Whether it's government infrastructure projects, mining activity, all of our major potential sources of skilled tradespeople have also very elevated levels of demand. So our expectation is, well, it's not too late to retrain as a carpenter in the building industry.
Interesting, because last week I found out something about the South African builder. I certainly didn't realise this. In South Africa, a builder does everything. So, it's not just building. He can do the electrical work and also the plumbing. You know that for sure.
Yeah, it's true also in Japan that the way labour on site is distributed is very different to what it is in Australia. Nonetheless, that is the nature of our trades and how they're structured. Talk, I think, also of reforming the trades by moving to prefab or more prefab housing is unlikely. Australia is in a unique situation where the weather is largely conducive of being able to build on site for 12 months of the year, with the exception maybe of North Queensland and remote Western Australia. And so I think that talk of a structural shift in how we build homes is very unlikely. The model we have, the subcontractor model, and the nature of the skilled trades, that's likely to remain the same framework we have in a decade or more.
Now, you mentioned prefabs. While I've got you there, what's your read at the moment on prefabs? We talked to a company that is dealing in container homes. They're converting, these 40-foot high cube containers, decking them out pretty nicely, if you like a small space. Downsizing has taken on a whole new meaning.
There is absolutely a role and a growing role for them. And I think particularly regional remote areas and, as you mentioned, secondary homes, granny flats, the likes are all going to see a growth in demand. Also, post-storm recovery, Australia has a good history of cyclones and floods, and we're going to see an increasing share of them. However, it's not going to become the dominant source of home building. It's not going to replace the model that we have at the moment.
Now, just before I let you go, we know that confidence matters almost as much as interest rates when people decide to build. If too many buyers across Australia start, sitting on their hands because of economic uncertainty, how quickly do you think that ripple through the entire construction industry could unfold?
Well, as soon as buyers sit on their hands, sellers then do the same. And so very quickly you see the number of homes that are available for sale, because no one likes to sell a house for less than what they thought it was worth 12 months earlier. And so then the number of homes on the market slows down, and suddenly we end up in a cycle, as you mentioned at the start there, where usually we only know that the house market has turned about 3 months after it has happened. And so that's why I say this is going to be a relatively short cycle, because it is based upon market confidence, not on supply and demand equations.
All right, we'll leave it there, Tim. Good on you. In from HIA today. We'll catch up another day, but thanks for coming on to the Real Estate Breakfast this morning, and enjoy your Thursday.
Anytime, thank you.
We help to break down real estate every day to help you better understand the Australian property market.
Which means if we have a situation down the track of people who have used superannuation for their home and then they have very little in retirement, I think the intention is for those individuals to think that they can be on a pension. That may not be the case in 30, 40, 50 years' time.
We're talking today 20 to 30 years of life after retirement. Who knows what those drugs are going to be capable of doing for the human body as a result of AI? It may well be longer in 10 years' time.
Yeah, that's correct. And I think that's what you've got to plan for, because we're seeing it. Each generation is living longer and longer. And what you say is very true. Unless people are planning to work into their 70s or 80s, and probably most people don't want to do that. There might be some that do. Essentially, I think people want to enjoy the remaining years of their life.
Is it still pretty hard to get some of those terms that you want in contracts because they're only lasting a week, so there's probably not a lot of room for negotiation?
No, there's not. And what we're actually seeing is highly competitive pricing. Of course, people are given multiple chances to increase their offer, but what we're seeing there is a limited number of special conditions being put on contracts. You want to make sure yours is the easiest and cleanest to deal with, and it's obviously an attractive price as well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.